Today, I'm going to use my own painful lesson to tell you why I lost money on this investment. First of all, in 2026, if you open your eyes in this politically turbulent environment with persistently high interest rates in Western societies, and someone tells you there is something young people can buy to get rich quickly, you must be cautious and careful. Now let's take a look. The 4 things you see here are all real assets I bought after the pandemic, and each one cost me over 6 figures. 6 figures in Australian dollars. Among them, some made me rich, but there were also some that kept me up at night, unable to sleep, and aged me overnight. Before we start sharing today, I want everyone to take a look first. Looking at these 4 growth charts, which type of asset would you buy? And based on these 4 charts, which type of asset would you avoid? Some assets can bring both cash flow and appreciation, such as stock dividends. So for this type of asset, I've drawn a red line. The black line represents its capital appreciation or depreciation, while the red line, apart from the black line's capital appreciation, also shows the cash flow income it provides. Now, let me throw out a bombshell. When many people see this chart, I'm sure they'll say, I want to buy this asset. I'll tell you, this asset made me the most money, but it's also something I'll never touch again in my life. Why? You'll understand once you hear what I have to say. All right, let's look from top to bottom. First, what is this first one? The first one is Australian stocks. Now, At that time, I bottom fished 2 stocks. The first stock was Webjet, and my reason for buying it was very simple. Its stock price had plummeted, and I believed the pandemic would eventually end. Many people recognized that this was an online flight ticket platform, so its stock price had hit rock bottom. I bought it without hesitation. The other stock I bought was also an airline stock. To hedge my risk, I bought a relatively large local Australian company in the South Pacific region, Qantas. Qantas performed quite well. When I bought it, it was $4 per share, and now it has become a bit more per share. I haven't really checked, because when it comes to buying stocks, I focus on long-term value investing. In fact, I only check the prices of these stocks maybe once a year. You might think that Qantas has performed pretty well, right? My principal has even doubled. But let me pour some cold water on that. Buying stocks alone can't pay your bills. Why? Let's keep going and look at the second thing I bought. To diversify my risk, what did I buy? I bought US stocks. As for US tech stocks, there are a lot of companies I'm optimistic about. For those who dabble in US stocks, you'll know there's an index called the NASDAQ. To put it simply, it's an index that brings together a number of companies. It includes some of the more advanced IT companies like Amazon, Apple, and Google, and it's also diversified in its holdings. The NASDAQ index has performed quite steadily overall, very stable, except for one drop I remember at the end of 2022. That year, I saw the news about the circuit breaker, and I really couldn't sleep that night because the index had fallen all the way back to its starting point. I had never encountered anything before that could shrink by 60% in just 2 years. There were actually several nights, not just one, when I couldn't sleep, constantly debating whether to sell or not. In the end, I didn't sell. Partly because I was busy with work, and partly because I just thought, let it be, let it be. I also hoped that maybe it would bounce back, but at the time I was really panicking. So what do these 2 charts tell you? That buying stocks or indices won't make you rich. That's why we say for a young person, whether you're in Australia, China, or anywhere else in the world, if you can save about $2,000 each month, which is around 3,000 to 4,000 Australian dollars, that's already quite impressive. Over a year, after deducting rent and living expenses, let's say for a family, you might be able to save 30,000 to 50,000 Australian dollars. Now, with that 30,000 to 50,000, even if you manage to buy some decent stocks, not necessarily ones that skyrocket, or you invest in a good index and you manage to double your principal, that means your 30,000 becomes 60,000. It could turn into 60,000, or your 50,000 could become 100,000. That's already a pretty good result. But there are also many people who lose money in the stock market. Yet, you'll notice something. This doesn't fundamentally change your life. Even if you make 30 or 50,000 from the stock market, I believe it doesn't make any real difference to your life. That kind of money can't keep up with housing prices. And you might even spend it all just buying a car. Or for women, buying a few designer bags could use it up. Or even just a few trips could exhaust it. So it really doesn't change much. Now let's move on to the main point and take a look at what this thing actually is. I wonder if anyone has guessed what it is yet. Well, this is Ethereum, a type of cryptocurrency. Many people have heard of Bitcoin, but at the time, I bought Ethereum because back in 2020, its ecosystem had some interesting aspects. I won't go into detail about that here, but the key point is that the price went from $600 when I bought it to around $4,000 now. It was purely dumb luck on my part. I never expected it would appreciate this much. I bought it simply because I found the technology interesting, so I bought 16 of these. Then I did something called staking. So what does staking mean? It can give you an annualized return of about 10%. What is it kind of like? It's a bit like a goose that lays golden eggs, and this goose keeps getting bigger. Its capital appreciates, so the goose itself becomes more and more valuable. And every year it also lays 1 or 2 golden eggs for you. That's basically what it means. So in other words, besides the capital appreciation in this, I also get an annual 10% compound interest. So why am I here strongly advising people not to buy this thing? Because looking back now, I realize this thing is basically gambling. Why do I say it's gambling? If you look at this curve, it appears to grow like this. But in reality, the actual value fluctuation is actually like this. Sometimes the frequency of these fluctuations is even more intense. And a lot of people, I've seen many of them, when the price surges like this, what do? There are also things called contracts, which basically means borrowing money to increase leverage and play this game. So even if the price goes up like this, it's not a big deal. But as soon as you add more leverage, if it drops by just 10%, all your principal is gone and you're out of the game. So at this point, it basically turns into gambling. Fortunately, I have a pretty steady mindset. Once I buy something, I just leave it alone. No matter how much it goes up or down now or in the future, I don't let it affect me. Why? Because here's the key point. If you've stuck around until now, I truly believe this video can change your life. This video can definitely help you make a lot of money. These assets, these three things are no longer important to me because I've found the most perfect asset. And that is land. Why is land the most perfect asset? Because land truly has a unique and irreplaceable quality. If you buy number 3 on this street, there is one less piece of land on this planet. You might say there are similar things like gold or diamonds, but sorry, those can be mined endlessly from the earth. And there are even lab-grown diamonds. They're not truly unique. At this point, a lot of people ask me, can I still buy apartments and such? My answer is always no. Why? Because apartments aren't scarce. What you're buying is just a chunk of steel and concrete in the air. As for house and land packages, these new builds have no real value from an investment perspective. Because what you're buying isn't something unique either. So after I realized this uniqueness of land, what kind of investment property did I buy for myself at the time? I bought an old rundown house because I valued the land it sat on, and then I renovated it. After the renovation, the property became positively cash flowing. What does that mean? When I bought this house, it cost 600,000 Australian dollars, but my down payment plus stamp duty only totaled 150,000 Australian dollars. So 150,000 Australian dollars. Now, 6 years later, how much is this house worth? It's worth 1 million Australian dollars. If you just compare these two numbers, what do you notice? Actually, there hasn't actually been that much appreciation, right? But the thing is, just like with this, I used leverage. However, because the volatility is so high with this kind of thing, I wouldn't use leverage to buy these assets. But when you buy real estate, the leverage the bank gives you comes with an exceptionally low interest rate. Your borrowing costs are extremely low. If you were to trade stocks and wanted to borrow money, the interest rate would be at least 50% higher than this. Let's take a closer look. Because I used 5 times leverage when 600,000 turned into 1 million. The 400,000 difference here was actually earned from my 120,000 down payment. In other words, my principal nearly quadrupled over 6 years, which is how this chart came about. And this property was also a case of using rent to pay the mortgage, meaning my tenants helped me pay off the loan and there was even some left over, which is what the red line above represents. This is what we call cash flow. Today's video is a bit long, but it's really packed with valuable information. So why do I recommend that young people nowadays buy this kind of asset? Remember, it must have land value. It's not about how beautiful the house is, because you'll realize something. Things like clothing, food, housing, and transportation, and stocks. Stocks have only existed for about 200 years. These two things have only been around for about 200 years. Ethereum, for example, has only existed for maybe a little over a decade in human history. But real estate, land, this has been around much longer. It has a history of 2,000 years. Ever since there was life on this planet, ever since humans appeared, this thing has had value. That's why I invest in it. And through reasonable borrowing, you can leverage yourself even more, and you can also use the labor of your tenants as leverage to help you pay. So in 2026, if you also want to get rich through investing, the answer is right in front of you. This is the only way.